Good evening, folks. Listening friends, first timers, old timers, weekly listeners. Welcome back to the DeFi Collective with Robert Vaughn and Alex Jewell. The DeFi Collective is a program where we discuss anything having to do with decentralized finance, Bitcoin, blockchain, et cetera, et cetera. Ethereum, you name it, we discuss it here. We usually respond to inquiries on our email address, which is the DeFi Collective at gmail.com. I'm Robert Vaughn, and this is Alex Jewell, and we're going to do a deep dive today. We've been hearing, like the government, a lot of chatter, a lot of backdoor chatter. We've been hearing a lot about people questioning how legitimate decentralized finance and cryptocurrency are. So the title of tonight's show is DeFi and Crypto Are Here to Stay. And we're going to present some examples. We're going to talk about the nature of what's going on and then the significance of what's going on. And I think just for instance, today Bitcoin was up 3%. The Dow Jones was up 1.5. Standard & Poor's up 2.24. And NASDAQ was up 3.7. So Bitcoin's right in there with the rest of the exchanges ahead of both. It's coming second out of four. Usually it's up a little bit more. NASDAQ had been down quite a bit, so it's sort of making up ground. That's why you saw the big percentage increase for NASDAQ. First of all, Biden, our president, announced suggested some things he might want to do with cryptocurrency. And as soon as he got off TV, it went up 8%. So we're hopeful that he'll do that like twice a week. And maybe by 6 months down the road, we'll all be rich, or we'll all be broke. We'll find out. But Alex, you want to talk a little bit about what the president mentioned regarding crypto in terms of regulation? Because we talk a lot about the need for regulation. What his suggestions were and how they might play moving forward.
Yeah, this was kind of, I'd say, better than a lot of pessimists were expecting it or kind of fearing it could be. The reality is that the way that Biden approached this, and I think he's been instructed to, the way that his advisors and different agencies who have been kind of looking at crypto for years already at this point, trying to understand what to do with it. The government and all governments at this point are in a really interesting spot of like having to navigate this new emerging technology that in some ways seems counterintuitive to what they have established or what they think should be established, right? And interestingly enough, one of the first things that he said before diving in was he talked about how the US needs to help be a part of innovation in the space. That this is an emerging technology, right? And I think this is the first great indicator that the US is doing a smart thing and recognizing that crypto is here to stay, that there's not a whole lot you can do about the fact that this is an emerging technology, that it's creating really interesting products and solutions to problems that we haven't solved before in this way. Mm-hmm. And so he acknowledges that first. Of course, when you have Janet Yellen in your ear, you have the SEC and the Treasury kind of already dealing with how to manage this from a regulation standpoint. The way that they spin that, of course, is protection for the consumer. So, of course, he does talk about protection for the consumer, right? How do we allow innovation and not stifle it, while also establishing regulation that protects people? And I think that on the surface is a very great way to look at it, right? Because we do have a ton of nefarious trading, like fake trading sites and a lot of scams. You have a lot of offshore crypto casinos.
Wait a minute, you're telling me that the Kardashian crypto coin, I wasted my money on that?
Well, that's the thing. You have people with a lot of influence making a lot of money on these things, and there's no regulation to hold them accountable, right? And so you think about how many people follow an influencer like the Kardashians, and why would they not trust what they're telling them, right? And then the next thing you know, they've sold at the top of their followers buying into it. Now this is a problem, right? And it is fair for the government to say, what do we do about this? But at the same time, I think the green indicator is them saying, but we recognize we have to be united as a government. We have to be educated as a government. We have to understand this emerging technology as a government so that we don't miss the boat in terms of being a competitive nation as this grows globally, right? And so I really appreciated the fact that both of those aspects of it were discussed and the unity of it was discussed, right? Because a lot of the things that we deal with in terms of government inefficiencies, government confusion, even negative results of government regulation has to do with a lack of unity in terms of the different agencies speaking to each other, being on the same page, having the same opinions about things. And ultimately, that's what came out of what Biden was talking about, right? Was this one government sort of idea, this unified government agency that can, or this task force that can kind of handle, establishing what is the messaging, like what does the government think about this, right? So that all the limbs, so to speak, are talking to each other.
Right. And this, I think, I think back to 71 or 72, I think when Nixon took us off the gold standard. The reason he took us off the gold standard is because we didn't have the gold reserves, because people started submitting their dollars and said, hey, I want to turn mine in for gold now, because word got on the street that Fort Knox didn't have what everybody thought it did. And so rather than be embarrassed and default, he took us off the gold standard.
Right.
A lot of people weren't crazy about that. I mean, I think most people didn't really like that because it upset the apple cart with the way people were used to doing business, much like cryptocurrency is doing.
Right.
But that was where we're at. We were off the gold standard. Now you guys got to get with it. Crypto, whether people want to admit it or not, and there's still a lot of people, traditional finance and economic people. I mean, Warren Buffett is not a believer at all. I mean, he's not a supporter at all.
He said some pretty horrendous stuff.
Yeah, he has. And a lot of it, I won't say a lot of it's age driven, because you do have some gentlemen who are a little older who are kind of getting with the program. For instance, Adam Dell, who's a venture capitalist at Goldman Sachs. Adam Dell is Michael Dell's brother, so he's controls probably a lot of money. Not just his money and Michael Dell's money. But he's a venture capitalist. Well, he has a new investing platform called Domain Money. And he said yesterday or the other day that the financial utility of the blockchain is undeniable. It's so undeniable, he left Goldman Sachs after he led its online only bank, Marcus. Now, I got to think that was a pretty good job. So for him to say, hey, you know what? I'm getting out of
where the future is,
yeah, he knows where the future is, and
Ken Griffin apologized last week. I think it was within a week or two. Ken, what is it, Griffin or Griffith? Griffin, yeah, Ken Griffin, Citadel. He had said a bunch of stuff about crypto previously, how terrible it was, how stupid it was. And recently, this past week, he had to be like, I might have been wrong on this. Is because, I mean, the Citadel is literally having to create, crypto funds and stuff. I mean, this is a reality of there's no argument anymore about if this is happening, right? Even the people like Buffett who see it happening. I don't think Buffett's ever said it's not happening. I think he just thinks it's stupid, right? And which is fine. You had a lot of really smart people who thought the internet.
He hasn't figured out how to corner the market on it. That's what it is.
Yeah, I mean, I think the reality is even the smartest people might miss the proper context or set of facts in their own analysis of something, and based on their own experiences and their own opinions about specific things. You end up with really relative digestion of what something is or why it solves a problem. You may not get that right away, right? Everybody kind of gets it differently or at a different time. And so that's why very smart people said the internet wouldn't work, right? Not because the internet wasn't going to work, but because sometimes smart people can be really wrong, and that's okay. Sometimes stupid people can be really right. There's a lot of stupid people who bought Bitcoin in 2011, and they are extremely lucky stupid people, right? And that's that's just the way things crumble, right? But in terms of like understanding where it's going, the reality is that it's not going anywhere. Even the people who don't like it see it happening. And so the question is like, are you going to understand it yourself, seek to understand it, be a part of it, or are you going to let it happen to you, right? And that's a very important distinction of like, if you let technology happen to you, then you lose some autonomy in that process. And that kind of goes against what crypto is about, right? Crypto is actually about you having the autonomy to make those decisions for yourself. And if you're not taking that initiative and that step to do it, you'll end up in a world in 5 years where everything is crypto. You just won't know about it. You won't care that much. It'll be sort of seamlessly integrated. And I think no matter how technically, how technically advanced you are, how financially inclined you are, regardless of those factors, there's enough you could be doing right now and understanding that you could get ahead of it. And I don't see a reason why somebody wouldn't want to.
Yeah. People, some people make things happen. Some people watch things happen. And some people wonder what the hell happened.
Yeah.
So you won't have to be in that last group is why we do the show. So we can try to keep you ahead of the game. And we tell you about things usually a lot of times before they really hit the newspaper or hit the media, because I do a lot of research. Alex works in the industry, so a lot of times we'll be aware of things before before the broader public is, and we try to let people know. So that's what this is. This is a show to educate people. And one of the things that was pretty interesting to me, Visa is the world's largest credit card. People use Visa, debit card, credit card. I mean, everybody probably has one Visa card in their pocket somewhere in their purse. Well, Visa did 10 trillion in transactions last year. Ethereum blockchain, Ethereum did 11.6 trillion on its platform. So here again, Ethereum did more in dollar transactions than Visa.
Mm-hmm.
That's a lot of bucks, man. I mean, you talk about trillions. That's a lot of money, man. 11.6 trillion, 1.6 trillion more than Visa. The 2 years prior, it was about 4 trillion. So in 2 years, it's moved past Visa. Visa used to be double Ethereum like two and a half years ago. Now Ethereum is doing more on its blockchain than Visa, and that right there should tell you that this is, anytime you get that much money moving on a platform, and it's increasing. You look at not just the dollar amount, but I think you should always look at trends and see which way something is trending.
Right.
If it's like a political campaign, you want to be, going into you want to be 4 weeks from the election with momentum trending upwards. And that's who usually wins. It's not the guy who's ahead. Yeah, it's not the guy who's ahead. It's the guy who's trending in a positive direction with about a month to go.
It's the metrics. Like, what are the metrics that matter, right? Like when you think about metrics that matter on a website, the metrics that matter aren't hits, right? The metrics that matter are how long do people stay? How many clicks do they take, right? When you think of like metrics that matter for an Instagram post, it's not likes, it's not even comments, believe it or not. It's sends and saves. If you have more sends and saves on an Instagram post, it's because those are indicators that somebody's going to do something as a result of that post, right? Like if you're posting a product, the likes and comments don't mean somebody's going to buy something, but sends and saves mean somebody's going to buy something. So when you look at like what metrics matter, you look at Ethereum, what matters isn't necessarily the fluctuating US dollar price. It really doesn't make a huge difference. What matters is what's the volume? What are people using this for? Like, how many different applications is this being used in? Like, what problems is it solving, right? Those are the real kind of questions of like, what are the metrics that matter in terms of human behavior that you're right, are trending towards like positive momentum to show that it's meaningful to people.
Yeah, it's meaningful, right.
And that's sort of a different way of thinking about numbers, right?
Yeah. Same thing with music. Well, data is sort of a part of everything nowadays. Data analytics, and one of the biggest, most important metrics in music is when you put a video or a song up. It's not so much how many people listen, although that's important, but it's how long they listen. Because on your major platforms like Spotify and YouTube and some of the streaming services, If people don't listen for 30 seconds, you don't get paid.
Yeah.
Because they found that if people listen for 30 seconds, there's a good chance that they'll buy that music. If they listen for 45 to 47 seconds, there's a good chance they'll buy a concert ticket. So what's important, you'd rather have, in an area, you'd rather have 50,000 people that listen for 45 seconds rather than 20 million that listen for 10 seconds.
Yeah.
Because the amount of time that they listen is just like the metric you said. That's the important metric,
Yeah.
And people are starting to realize that now.
And Visa, I mean, it makes sense because Visa, there's like 9 steps in any given transaction. People don't think about what happens when you swipe a credit card, but there's 9 steps. It's like 4 or 5 different entities that are all part of this that have to process it. They have to hold IOUs against each other. They have to like cross check. I mean, it ends up being like a really cumbersome thing behind the scenes. And for you, you get immediate satisfaction, right? It's like, oh, it's approved or rejected. But behind the scenes, you want to talk about energy usage and like the amount of people involved in like one simple transaction. And it's wild, right? And so when you look at something like Ethereum that not only blew Visa's volume out of the water in terms of transactions, but it's also peer-to-peer. There's nothing in the middle.
Middleman. Yeah,
there's no middleman that's like,
if there's 9 transactions, there's 9 middlemen that got a piece of the action too.
Right, exactly. Yeah, and so it's very different. It's a very different way of thinking about how do you create networks that work, and that's why it's so valuable, right? Is because it solves this fundamental efficiency problem of how we process transactions in our world. Because a lot of people don't know this. Credit cards didn't even start off magnetic or let alone electric. Credit cards started off as actual metal plates with where they would like they would press the numbers into these metal plates. And so then you'd give it to the store. I mean, very few people had this, but the store would have to call the bank and verify that you were good for the credit that you needed for this card. Well, eventually they found out that they could store information in magnetic particles. So then that's where the magnetic strips came from. But this was still a process. What they were doing is they were literally like swiping it across they had the swiper thing that would store the information.
Imprint machine.
Card. It was imprint. Yeah, it was printing it. It was still very manual. But over time, it wasn't designed from the beginning as like an efficiency thing, right? It sort of was built on itself as technology around it grew. They realized like, wow, we actually have to like make this thing integrate with the technology people want to use. And they have to, instead of solving fundamental security flaws too, they had to just keep adding new things, right? I mean, you think about now, like every credit card then had to have like a 4-digit code, 3 or 4-digit code on the back to like verify that you had the card. But then they realized how easy it was to copy these cards because you could buy a $5 card reader writer on Amazon and copy card numbers, right? And you're like, uh-oh, this is another problem. Now everybody has all of the information they need because it's literally verifiable in the magnetic strip. The 3 or 4-digit number is on there. So then they were like, well, let's add this like SIM card looking thing into the card too. And now we have 3 different numbers that we're juggling around. And that'll be harder because you can't get the number out of the chip, right? But you didn't solve any fundamental original problems. They're still there. You just added Band-Aids on top, right?
Right. You created more steps. And
that's not sustainable. That's why we have cycles. That's why we have cycles of technology, because the cycle of technology, as you have enough Band-Aids trying to fit something into the modern age, those Band-Aids eventually don't hold up, right? And at some point you have to reset with a new paradigm, with some sort of new emerging technology to solve the problem. We had this during the Industrial Revolution. We're having this now, and it happens over and over and over again. And if you don't accept what the new technology is or recognize it, then it happens to you as opposed to you being on the forefront of it.
Right. And it's funny because I was doing a little history research about say going back 500-600 years. Every time you had somebody new that ran the world, it was because of a certain economic system. When the Dutch were in charge, you know, slavery. There was a lot of slavery.
Yeah.
There was a lot of shipping, a lot of slavery, a lot of mercantilism, where you would make sure people owed you more than you owed them, even if it meant going to South America, stealing all the gold, so much so that the ship sank before it got back.
Yeah.
And then after the Dutch, you had the British Empire. Prior to the Dutch, there's some written history, but it was, there was a lot of there were African, there was an African empire, Mali, and they did a lot with Rome, with Caesar, to the point where Caesar had appointed an African named Septimus Servus to rule England. So that's going back a ways. But after the Dutch, you had the British Empire, which was really the beginning of industrialization. And the UK pretty much ran the world. And then the economic system kind of changed a little bit, and you had a little more speculation. And that's kind of when America came on the scene with capitalism. And the French, after the French Revolution, they said we're going to have laissez-faire capitalism where the government isn't involved. And then the U.S. said, we're going to have American-style capitalism where the government's always involved. and now we're at another inflection point,
Right.
because every time something happened, it was because people got too greedy. Usually, the Dutch
Right.
got too greedy, English got too greedy, the French got too greedy, Americans got too greedy, and you had a few people with all the money and nobody with no money. In the early 1900s, they had J.P. Morgan. Before the crash of 29, probably 1907, 1910, 1911, the U.S. ran out of money. And they said, hey, J.P. Morgan, can you loan us some money? He said, sure. He said, but you're going to have to set up some kind of system so you don't have to come begging me for money again. And so that's when the American banking system was set up after that.
Yep.
And so we're at another inflection point now where capitalism has ceased to work for everybody. And that's what happens with these systems. They don't work for everybody. They certainly didn't work for the slaves. They didn't work for places in Africa and Persia where England was, taking all the resources and taking all the people. So capitalism now is not working for everybody, like the way it should. And I think a lot of times things happen in ways that you don't foresee. For instance, crypto, as a result of Russia attacking Ukraine. Well, now Russian ruble is worth a fraction of what it was worth. But every time the ruble goes down 50% in Russia, Bitcoin goes up 50%.
Right.
So Bitcoin is really the way to do business now in Russia. And at the same time, in Ukraine, a lot of the money, a lot of the donations came in as cryptocurrency. And what the President Zelensky did is he said, well, our banks are gone. It's not safe to go out and do this or do that. He said, so we're going to airdrop cryptocurrency to the people so they'll have money to buy food and things like that.
Right.
So here again, in regards to what the currency, is doing, Bitcoin and cryptocurrency is kind of, the main currency with this war going on. And it's become even more popular. It's kind of a weird development, a way for it to develop and, become more popular. But people are realizing, I know people that say, they donate money to Ukraine and they did cryptocurrency. They just went to the wallet address and donated money. And that way they could give the money.
Yeah, that's what I did. Yeah, I give it directly. Yeah. You don't even have to go through something in the middle and trust that it's going to go to the right place. And
right, you send dollars, you send dollars and somebody's got to get those dollars. You're not even sure if they're going to give them all the money. Maybe they take some, maybe they don't. Then they get the money, and what do? They have to convert it to something. You send crypto. So if you're thinking about donate money to somebody, send crypto, man. That way they can airdrop it to whoever they want to have it.
Oh yeah, it's great. Like anytime you want to give somebody a gift or quick, quick money to people, especially people that in other countries, and there's no complexity. It's immediate. It's fast, right? And that's why, countries like Estonia, for example, without without catastrophe starting easy. Mexico just came out and said that Bitcoin's considered a legal tender, and so you have these shifts happening. You have stock exchanges buying crypto, acquiring crypto companies, blockchain companies, because they understand that this is the future of settlement platforms. How do they settle things immediately and quickly and verifiably, with quorum? It's the perfect thing for that, right? Atomic settlements, loans, everything. I mean, everything can be done this way in a highly liquid and tokenized way for how our world is designed right now, which is digital, right? Anytime you exchange anything, the moment you get a car to go somewhere, or you send money to your house cleaner or your babysitter, right? Most people aren't doing those in $20 bills. So you think about it, most of your life is already somewhat tokenized in terms of like its digital data representation of how you paid something. But the problem is that the end currency that you're doing all those transactions in is not remotely digital, right? So what you're doing is you're always exchanging and living your lives in a digital way, when the underlying money itself, and underlying economy, is not only mostly fictitious, right? It's not really backed by anything, but it's also analog. And so any conversion between those is highly expensive, inefficient, and ultimately unnecessary.
That's right.
So that's why it makes sense that
Plus,
we're moving towards
it takes the
digital
middleman. It
currencies.
takes the middleman out of the picture, so you don't have to. One thing that's very profitable are currency exchanges in countries. That's like, and they have these. For instance, I don't want to pick on the Middle East, but there are a lot of, they have them in Africa. They have these underground currency exchanges where
Mhm.
you can go see a guy and you give him 50 grand in cash, and somebody over there can pick up 45 grand or whatever he charges, and he'll call his people and say, "Hey, I got 50 grand from so and so, and his brother's coming to pick up 50 grand minus our fee and manage 5 grand."
So
And that
OTC,
happens a lot. That happens a lot.
OTC.
Yeah, only see, yeah. A lot of money goes from here to Mexico. You
Yep.
have a lot of money going from the United States to Mexico. A lot goes everywhere. But if you get on a plane, you can only carry, I think, what, $40,000. And even with banks, you're limited on how much you can transfer.
So I have to carry gems on planes, right?
Yeah, you have to carry gems. Yeah. Or either do it underground, take your chances. But with cryptocurrency now, you can say, okay, I owe Alex 40 grand. Well, I'll wait till tomorrow and I'll send him 1 Bitcoin, and that way he'll have to kick me back 3 grand when it goes up in the morning, or something. But and currency exchanges are very, very profitable businesses. But with Bitcoin, a lot of people are against it because it upsets the apple cart with the way they've been doing business. If you're a banker and you make money on making loans, well, now here comes somebody who um, can borrow against his own Bitcoin. That's like if you borrow against your house, you got to pay interest to yourself or to the bank. You don't really get the interest; you pay it to the bank. But if you could stake Bitcoin, you can borrow against your cryptocurrency, and it won't cost you a dime. So that's another advantage that takes the middleman out of the picture, takes the bank out of the picture, because you
Right.
don't have to pay uh, someone to loan you your own money, which is pretty stupid. But that's how they make money. Also, in Ukraine, President Zelensky has signed a virtual asset bill in a law, and now cryptocurrency is legal tender. Bitcoin is legal tender for anything in Ukraine. And moving forward, this is not something that's going to change. If anything, it's going to cause some of the other countries, the contiguous European countries, and some of the other countries to do business. Ukraine is the largest supplier of grain to Africa, and they welcome cryptocurrency for grain.
Mhm.
And I heard some pretty wild stuff, but this one gentleman was saying it's the reason Russia wants to destroy Ukraine so they can take the grain business down, and then they can get grain from other places and sell it to other people, and that's why they say that's why China, is doing what they're doing in a lot of places. So a lot of times, wars, they don't make sense, and they're evil and they're bad, but usually there's money behind it. The
Right.
previous
When
100
you
years
look
has
at it,
always
they
been
like
about
really
oil. Yeah,
they make some sense, right? When like
yeah.
not they don't make sense in
Hmm.
terms of like this is a good thing, right?
Hmm.
But when you look at the human condition and you look at human greed that has driven war forever, um, it usually isn't as simple as like somebody went nuts.
No, no,
Like
no.
usually there's like some sort of there's something there. Not that Putin is nuts, not that like watching all of his advisors shake and sputter and nervously pee themselves, like being questioned by him if they agree with him or not. Like
Hmm.
he's obviously a little nuts. But the reality is that what drives war, what has driven our wars, what has driven France's wars and Spain's wars and Britain's wars, all of the same things that we've pretty much done throughout history. What's
Hmm.
driven all of those things is often imperialism, but at the heart of imperialism is what it's this idea of capital, of
Yeah.
commerce, of like commodity, right? These things, these big C words that maintain our power and our comfort
Hmm.
as a world power. And that's ultimately what's driving Russia right now. You look at Ukraine; they're in every top list. For a lot of commodities, Ukraine's in the top 5 list for a
And I'm going to
lot
tell
of
you,
things.
I got a good one for you too. Russia, some of the first targets that they hit in Ukraine, and at the time it happened, I didn't think twice about it. But Ukraine is the number 2 chip maker in the world. Guess who's number 1?
Chips.
Yeah,
I
China.
don't Russia. Oh, China.
China.
That makes sense.
So he takes out Ukraine's chip factories. The United States is kind of like a close second to China, but he
Right.
takes out those chip factories, and they supply something like, I thought it was 38% of the chips that the world uses. He takes out those chip factories. Those were some of the first factories that were hit. Now those chips aren't being made, so the chips coming from China are a little more expensive, and this puts China in a better position. So see, I think a lot of times, you know, um, like Alex said, a lot of times it's more complicated than just he wants him crazy. Everybody knows he's crazy, but a lot of times there's more to it than that. And I can't, I mean, you could say, well, he took out the chip factories because they, are used in the anti-ballistic missiles and whatever, the Tomahawk missiles and all
That's where
those.
they have the potato throwers, so they had to, they had to take those out.
Yeah, so it's funny how they hit certain things and certain people benefit. And I'll be honest with you, China seems to be making out like a fat rat on this war. You know, from because Ukraine, one of the reasons Russia hated to lose Ukraine was because Ukraine supplies a lot of the world's wheat. A lot of grain in the world. And Russia, you're not growing anything in Siberia, man, but icicles. You know what I'm saying? So that kind of put them put them at a disadvantage, and it's kind of funny too, because I had a conversation with a gentleman. We're talking about nuclear weapons, how nuclear weapons, and he said, I said, well, it was great that some of the countries gave up their nuclear weapons. Well, a lot of them said they did, but did they really give them all up? Because
They agreed to plans.
yeah, yeah.
So
And I'll tell
over
you how.
time, they're like, well, we can't get rid of all of them at once. So they're like,
Yeah, yeah.
we'll just decrease our nuclear
Mhm.
power over time. And the US like was part of that promise. And you look at the US now
Yeah.
on the graph, and we it doesn't look like we got rid of very many nuclear weapons. Or if we did, we made new ones at the same
Yeah,
time because
but see, a lot of the countries didn't give them all up.
right.
You don't hear too much about it. Israel didn't give them up. South Africa didn't give them up. They got them from Israel. They got something. They didn't give them all up. And they said they gave them all up. We're out of the business. You can tell who gave them up are the countries that got taken over. Like Libya really gave theirs up.
Yeah.
And what happened as soon as they gave them up? Um, they went in there and killed Gaddafi and got the
Right.
gold.
Right.
Um, North Korea didn't give theirs up, and you see nobody is in there screwing around either, right?
Nope.
Ukraine gave theirs up, and they said what Putin promised he wouldn't attack us. Russia promised they wouldn't attack us if we gave up our nuclear weapons. It's like, all the countries that gave up their nuclear weapons are a lot of the ones getting attacked now.
Yep.
So, you can say that, nuclear weapons are awful and this, but I mean, it served as a deterrent, because if those countries had to maintain their nuclear weapons, Ukraine, they still had nuclear weapons, Putin wouldn't be in there now. I guarantee he wouldn't be in there.
Well, part of mutually assured destruction, right, is the mutual part.
Yeah,
and if you lose the mutual part, and the inverse of that, which is, the fact that if we don't have the mutual assured destruction part anymore, we can do whatever we want because we're not going to get destroyed, right? And that's
right. Yeah.
It's just, you can't help human nature in that regard. That if you lose the systemic balance, right, that exists because nuclear was invented to begin with, if you lose that balance, somebody's going to take advantage of that. And in this case, a lot of people over history have taken advantage of that. And if it's not 10 leaders who aren't going to take advantage of it, it's the 11th guy, right? And that's statistically probable that if you don't have the mutually assured destruction at this point,
right, yeah,
good luck.
And it was kind of funny hearing it. Ukraine said, well, Russia promised that they would never attack us if we gave up our nuclear weapons. I mean, so much for that. But it's interesting because nuclear power, Russia uses nuclear power to power the Bitcoin mining because it's the cheapest form of energy, I guess, to use for Bitcoin mining.
Smart. I mean, that is smart. Like, nuclear power is a wonderful thing for energy. So I mean, it's a very critical component of going, towards renewable energy sources.
Right. It's certainly a lot better than coal and gas, fossil fuels.
And as it innovates, as it gets better, which every decade you see, you see really new ways of even using like nuclear waste. I mean, you have like some nuclear solutions now that don't use active uranium. They use the inactive uranium that's been spent. And we have a bunch of that lying around all over the world. And so we didn't have something to do with that anyway. But what's cool about those is, like, the moment that you cut the power, it doesn't stay active. It's not radioactive beyond it having an energy source. And so, I mean, it's pretty cool. Like, I think something like nuclear is really important, but especially for Bitcoin. So it's interesting to see Russia taking advantage of that.
Front of the line when it's technology. Let me see, Dubai. Talk about Dubai for a minute.
The designed city.
Yeah, the designed city, and I've never been there myself, but I've talked to people who've been there, and one of the things that they always say is, this is a whole different level of wealth.
It's designed for money, right?
Yeah, this is like, there's rich guys all over, and they have these mansions, but this is a whole different level. These people have, private zoos in their backyard with white lions and tigers.
Yeah, animals that would definitely be in that desert if they weren't brought there.
Yeah, and they take someplace in the desert and turn it into a farm. They have 20 acres of farmland in the middle of the desert because of they can afford the desalination plants to supply the water.
Right.
So
they can afford they truck out the waste from the Burj Khalifa every day. They don't have there's no sewer system. They have to take trucks and fill it with the waste. And they drive, you can see them down the highway, Dubai, like 100 trucks every day have to go load up everybody's mess from the Burj Khalifa, and then they drive it. The building. I mean, it's just it's designed, but like, it didn't solve the problem of like where it is.
That's what happens when you can throw money at a problem. You don't solve it, but you make it somebody else's problem. It's not your problem.
Right, because things like slave labor are still a problem in Dubai, where they bring in people from India and Pakistan, promise them a job, and then it turns out it's not really a job. So
Well, it's sort of like a job. You can't leave,
Right.
and like people can't even leave the premises. I mean, it's
Right.
crazy,
Yeah.
and that this still goes on, but they adopted a crypto law and established an independent commission
Yep.
to oversee crypto. And Binance, I think that's the company that's owned by the Winklevoss brothers, if I'm correct. Is that their company?
No.
No, okay.
Binance is a different guy. Winklevoss is like A16Z. No,
Okay,
that's
okay, okay,
Horowitz. Yeah.
okay. But anyway, Binance, which is a cryptocurrency like crypto.com, is was granted a crypto license to conduct operations in
Gemini.
Dubai. Which I mean, if you're
Winklevoss.
in the
Winklevoss
crypto
is Gemini.
Gemini, that's right. I'm sorry. Yeah,
Yeah.
Gemini. That's the other one on my phone, on the app.
Yeah.
I never use it, but anyway. But and to be granted a license to do crypto in Dubai is like saying, okay, you can sell liquor to this, all the alcoholics in the city. I mean, it's got to be pretty lucrative. And,
Yep.
and you gotta figure that they probably, some people in Dubai probably have some sort of investment in Binance, because I don't think otherwise they would just put all that money in their pocket, or there's some kind of deal that was cut, I'm sure. But saying that to say that Dubai, one of the richest cities in the world, I don't know if it's the richest city on earth, but it's probably got to be right up there with Tokyo and New York, and some other cities. But they're going crypto. They're going full force, going crypto. You know, and anything you can do, anything you can buy, you can use crypto to buy it. Through
Right.
the Binance exchange. There's a company called iTrust Capital, which offers a cryptocurrency IRA that has no fees. And that sounds like a pretty good deal to me. I mean, if you're looking for something long term to invest in, every year, what Bitcoin goes up, 100%? It just about doubles every year. Just about every year it's double. So, I mean, if you're looking for something to retire in 20 years, that might not be a bad idea. Is a crypto IRA, something that's for a long term, because that's what Bitcoin is. Primarily, the utility of Bitcoin is a storage of wealth, a storage of
Right.
capital.
Yeah.
It's not like an options, like selling short or something where you're gonna spend 100 and make 25 million. It's in the long term, you'll do pretty good.
Yeah. Like I
So.
don't support ETFs or like futures on Bitcoin, believe it or not. It's kind of a double-edged sword, right? Because
Mhm.
it's, in some ways, it legitimizes the commodity, but in other ways, it's sort of what broke with the previous system of like futures do incentivize some short selling too. And
Sure.
the moment you start doing that, you start incentivizing too much virtualization to the point where the virtualization itself is what people are profiting off of,
Mhm.
and not the value of the underlying utilities or commodities, right?
Mhm.
And it sort of undermines, and even like it just manipulates, it incentivizes manipulation, that just centralizes wealth, and that's obviously not what Bitcoin's supposed to do.
Right.
So it's sort of a double-edged sword there with what sort of virtual, like what sort of financial instruments I think are relevant to Bitcoin.
Hmm. Yeah. Last year, a lot of people were betting that Bitcoin was going to go up. I think the strike price was like, I mean, it's ridiculous. It was close to 100,000,
Yeah.
but the contracts were so cheap. I think I forget what the contracts were, but they were less than $1,000. They were really cheap. But I was thinking, I said, man, there's no way Bitcoin's going to go over 100,000.
It's
You
just,
know.
yeah, it had too much growth
Hmm.
going into it. And we also were dealing with, because when you're talking about the US dollar value of Bitcoin,
Hmm.
you're talking about really what is the outside economy that we have to sort of think about it in, what's
Hmm.
happening there, right? And the reality is that, like, regardless of Bitcoin's adoption or its utility or its importance in 5 years or tomorrow, regardless of those things, if you're still thinking about it in terms of today's economy and today's fiat currencies and today's market that has a lot of overreaction to
Mhm.
chaos, and we've had plenty of that,
Right.
then you're dealing with way too many outside factors
Mhm.
that aren't Bitcoin's fault, but they impact, their
Right.
US dollar pair.
Mhm. And I think anytime you have, this is the first substantial change that the world economy will have in terms of currency in how many years? At first I thought it was like
A very long time.
300. Then I said, no, it's probably like 10,000, but in a long time.
Yeah.
This is a sort of, when we talk about a paradigm shift, this is a paradigm shift.
Yeah.
And I think the way you think about money, and banking, and finance is totally different.
Yeah.
One of the things that Bitcoin does, and DAOs, decentralized autonomous organizations, which are democratic organizations where everybody votes on, what a corporation does, for instance, or a co-op, a worker co-op is very similar to a DAO, and that everybody participates in the decision making. But one of the things that decentralized finance does, it reverses the flow of ownership, and it gives more power back to the people who actually have the money. You may say, "Oh God, I got $400,000 in Huntington Bank," and somebody says, "Oh yeah, I got 500,000." Says, "Between us, we got $1 million in there." But guess what? That doesn't mean anything. You don't have any say so in how that bank functions.
Right.
And if a million of you got $1 million in there, you still don't have any say so,
Right.
because it's a centralized organization, a centralized financial institution. What decentralization does, you could take that same $400,000 and say, you know what, I'm going to stake this, with some crypto in a cryptocurrency, where I can, be guaranteed to get a certain percentage.
Right.
And you'll get much more than you will in a bank. And you say, well, how safe is it? Well, how safe is a bank? Don't ask my grandmother that, rest her soul, but I mean, she tells me stories about Quincy Savings and Loan in Cleveland, Ohio, the day of the crash, and she just got there soon enough to get her money out, and then the people, that got there an hour or two later, first they were giving you 75 cents on a dollar, then 50 cents on a dollar, and she said by 3 o'clock that afternoon they ran out of money. you
Right.
know so, banks are not always the safest places either. But I think one of the things that, I like about, Bitcoin and cryptocurrency is that, Bitcoin is in a limited quantity of Bitcoin that exists, which means the more demand, the higher the price for each particular coin. Each
Right.
unit is going to be higher. More satoshis, I think you said, Alex. Is that how you measure
Yeah.
it in
Yeah.
satoshis? Yeah,
Satoshi's.
yeah, yeah. So, and it's on a ledger. It's on an open ledger, that's verifiable. That's there for everyone to see. This is why, the Canadian government just seized $1 million in Bitcoin from the truckers who blocked the bridge, the Mackinac Bridge, from trucks coming in or out of America going to Canada, and they got their, donations in Bitcoin, and they thought that they would bypass the government, and the government just sees the donation because you can
Right.
track it. You can track
Right.
it.
Yeah.
So for all the people, I've heard a lot of people, finance people, say, well, Bitcoin's used by drug dealers. No, drug dealers use American dollars,
Yeah. It's a
hundred
terrible
dollar bills,
idea.
man. Yeah,
If I have two options between something to use for drugs, why would I pick the publicly provable, verifiable, immutable record that anybody can look at,
right,
and
right,
based on, like, unless I create a brand new wallet and I somehow don't touch that wallet with anything that I can be associated with my identity,
hmm
and then somehow convert that at any point that uses KYC, know your customer, or AML, anti-money laundering, which pretty much every on or off ramp at this point does. There's no way, there's no way that I can move that without it being known that it was mine, right? And that's
hmm
it's a dumb idea. Why would I do that instead of cash? That there's no nobody says
right.
there's no tracing of the
Now
cash.
there used to be a time, maybe 10 years ago, when people bought drugs on the deep web with Bitcoin before, and most people, and governments included, didn't really know what it was then. There used to
Right.
be a time people did that, but that time is long gone. So, and I think that's one of the advantages of Bitcoin, that it is traceable and it is verifiable and it's on an open ledger. And we talked before about reapothecated treasuries, how you can get treasuries from the government and you can loan those out. You can get 100 million in treasuries and loan them out to 10 different people. And here you're getting, you're collecting interest on treasuries that you don't really have. That's called reapothecated treasuries, and this goes on. And I think they do it with gold too, if I'm not mistaken. Where
Yeah.
Alex might have possession of you know a billion in gold, and he can loan it out to 10 different people because you don't actually get the gold; you get the contract.
Well, that's where things like futures come into play, right? When you have those virtualizations and the way that you're trading them are in ounces of gold that may not exist, right? And that's dumb. I don't I don't the only reason that exists is so that rich people who already have the privilege and the access to be able to trade non-existent ounces of gold can make money on non-existent ounces of gold by manipulating the market using their large amount of non-existent ounces of gold to change the price in a direction that they want it to by providing liquidity or taking it out.
Mm-hmm. That's right. Yeah.
It's
And
just dumb.
for all you know, they may not have any goal.
And futures started as a good thing,
Mm.
and they started as a way to like help. Let's say like I'm some sort of farming distributor, right? And I have to deal with commodities that maybe we don't know how much they're going to be. We don't know how many successful crops they're going to be, right? And so sometimes in the beginning, those virtualizations in the form of ETFs or futures, those things were useful for working class people. That was a long time ago. Of course, it ended up being misused.
Yeah, and I think a lot of the things that go on in the financial system are used in different ways than they were intended. Like just like fractional lending,
Yeah.
which means you can have $1 million and you can loan out $10 million. As long as you have 10% of the amount that you loan out in your reserves, which is kind of crazy. Because if you're a car dealer with a bank, you can say, you can have one dealership that's maybe you got 5 million in cash, and you can go buy 9 other dealerships for $5 million without actually having to put up any money. You can just issue a line of credit.
You just get a line of credit. Yeah.
A line of credit at your bank, and there's dealerships that do it. There are dealerships right here in this city, and I'm sure they're in New York and every other city that do it. You put a certain amount of money, and you can loan out 10 times that much money, and you can buy other dealerships.
You can pay yourself out of your line of credit, right? So if you get lines of credit for new businesses and you purchase those new businesses and then you pay yourself whatever you want,
a line of credit,
whatever you determine, you can pay all your friends on the board, whatever is determined as fair.
Yeah, fair. Yeah. Okay.
And then all of a sudden your business doesn't work and you're bankrupt and then you have to leave, but you made all this money off of money that didn't exist.
Yeah. And another thing that is goes on is that people who are wealthy, they don't spend their own money.
No, it's always
borrowed money. You can borrow
borrowed,
money.
invested.
If you got $700 million in the bank, in Alex's bank, you say, Alex, I want to borrow 50 million at no interest.
Yeah.
And he said, how much money you got in here? 700 million. Okay, no problem. So you can borrow 50 million and live off of it, and maybe invest it and generate enough income to live off of, and not even touch your own money. And it's not even your money, man. It's like borrowed money at 0%. And this goes on. It's not something I'm making up. This goes on. And if you got enough money in a bank, or you can convince a banker to loan you money, or you can do like Alex and have your own bank. You can pay yourself on borrowed money, which is pretty cool, man. I think it's unethical, but it goes on, and a lot of people do it.
Yeah.
And then the guy that works at the bank, he gets $12 an hour to guard the bank with his life in case somebody comes to rob it. So I don't know,
Right.
like what the record was that Roberta Flack? Where's the love? Where's the love? So,
But I
yeah.
mean, the moral of all this story is that like
Mhm.
clearly this system has lived beyond its means, right?
Right. Mhm.
It's been stretched and manipulated and bruised and like band-aids put everywhere, and it's broken. It sucks. And we're moving almost naturally, right? This natural organic process towards what's next, right? This has happened cyclically over and over and over again. And so, really what's become even more apparent in the last, year at least, but for me, years I've seen this, but like last year, what's become really apparent is like this isn't going anywhere. This isn't like an idea, right? This is the trajectory. This is the trend line we were talking
Right. This is
about. And
trajectory.
so, just to reiterate this earlier point of like, you are either going to be a master of it, you're going to understand why it's important, you're going to start integrating it in your life in important ways and meaningful ways and finding meaning there,
Hmm.
or it's going to happen to you.
Right. Right.
And
Make
you're
things
not going to
happen. Don't
be
wonder what the hell happened.
you're
Make
not
things.
going to have a seat at the table either. It'll be helpful to you. Obviously, this is the whole point of this technology, is that it's equitable and it's owned by the people, and that's really important. But for me, I'm a person who likes to know what's happening, right, and not just let it happen to me. And I think that's where you actually take advantage of this ownership principle.
Hmm. Yeah. Yeah. And so, I would tell anyone, learn about blockchain, learn about crypto, learn about decentralized finance. These things are here to stay. They're not going anywhere. I don't. I haven't heard about anyone teach them in school. I don't know why you wouldn't want to teach junior high school kids or high school kids about blockchain and
They're
crypto.
teaching other people on TikTok.
Oh, they're teaching them. Yeah, they already know. Yeah, yeah, yeah. But none of the schools teach. None of the schools teach this, and I think this is something that your kids, and if you have kids, you want to educate them. You want to tell them how this works, and it means you have to understand it too, because this is the way. This is the way it's going. Same thing with capitalism. I mean, I remember, years ago in the car business, before I got in it, but many years ago, people didn't know anything about leases and interest rates. They didn't ever tell you what you were paying for a car. They just told you this is your payment. This is your payment, 162 bucks a month, and you get a brand new Mustang. Well, you never knew what kind of fees were in it because people just didn't know. They weren't that sophisticated.
Yeah.
They didn't know. The people leasing, they didn't know what the money factor meant. What is a money factor? Oh, you got a 0.06257 money factor. That's pretty good, huh? And what you guys? Oh yeah, that's great. But I think people now are much more sophisticated. And are being even more sophisticated when it comes to blockchain and decentralized finance. So um, learn all you can, because this, like DeFi and crypto are here to stay.
Yep.
And that's the point of today's show, So anybody who, and Kyrie, the world's not flat. I guarantee you, it's not. I saw it on TV from Bezos' spaceship. It's round.
It's not
Okay,
flat, it's a donut.
it's a donut. Yeah, yeah. So, yeah. But once again, we thank you, and we, ask you to check us out on YouTube, the DeFi Collective, at Let's Talk Radio with a Y, RADYO, the DeFi Collective with Robert Vaughn and Alex Jewell. Our email is the DeFi Collective at gmail.com. If there are any subjects you're interested in hearing about, please let us know. We'll find out about them, or we'll get somebody on that knows about them. But we feel that it's important to try to educate people on, decentralized finance, blockchain, crypto, because it's here to stay. You can put your head in the sand, and when you pop it up, you go to the store and it says, "Oh, we don't take dollars anymore. Give me your crypto wallet."
You can put your head in the Dubai sand if you want.
Yeah, the Dubai sand. Yeah, you might come up with some crypto in your mouth or something. I don't know. But anyway, thanks again for watching. And any closing thoughts, Alex?
I think we nailed it.
Okay, study your crypto. Have a great week. Bye bye.